In this video, I'm going to show you how you can get paid to place limit orders in the stock market. So we are going to make a difference here between placing a regular limit order and placing a cash secured put, which is my strategy, the premium cycle. So normal retail investors usually find a stock where they think it is very attractive and they place a limit order in the market where they basically say, I want to buy this stock if it ever drops to a certain price. And if it ever drops to that price, that retail investor is going to be assigned shares of this stock. So usually you set a limit order which is good till cancelled, which means it is good until you cancel it or until it will be filled by the market, which means if the stock drops to your price, you will be assigned the shares. So you have full exposure to the stock market. If it drops, you will end up buying the shares because this is how it technically works in your brokerage account. Okay? So the stock is trading at a certain price. If it goes down and if it reaches your limit order, you will be assigned the shares, your order will be filled, and after that, your stock can, of course, go down even more. So, for example, a stock is trading around $100 and you set a limit order at $90 and the stock drops to 85, you will be assigned, your limit order will activate at $90, but the stock can continue to drop more, and therefore you will have unrealized losses. Like any other trader, if you buy at a certain price and it goes down more, you will have unrealized losses. So until now, basically, you generated absolutely no income at all. So you were sitting there to wait to possibly buy the stock now if it finally drops, but you generated absolutely no income. Now your stock dropped even a little bit more, and all you have is an unrealized loss, nothing more, okay? The only benefit, if we compare it now to the cash secured put, which I highly recommend, and I want to mention here that benefit is actually just in quotes, okay? It's not a real benefit, in my opinion. So that's why I marked it here like that. Because your only benefit, if we want to call it like that, is that you can buy less than 100 shares. Cash secured put is an options contract, and options always come in 100 pack of shares, okay? So one option equals 100 shares. If I place a limit order, I can choose if I want to buy 1 share, 2 shares, 3 shares, however many shares I want, but it can be less than 100. So we can call that a benefit here, depending on your capital situation. If we compare it to a cash secured put, which I teach inside my community, the premium cycle, well, basically, it is the same mechanics like a limit order, okay? So also you choose a strike price, which is going to be your limit order price. That's exactly the same mechanic. And here you choose an expiration date, which is basically good until canceled. So until you cancel your limit order, it will be activated. On the cash secured put side, you choose an expiration date, okay? So I can say if it drops to this price, to my strike price in 1 month, I'm willing to buy 100 shares of this stock. And for this commitment, I am actually getting paid by the market. So the market is paying me to commit to possibly buy 100 shares of a really good stock that I want to own anyways. So my motivation is exactly the same. Like with a limit order, I want to buy this stock at a certain price. The motivation and the goal here is exactly the same. The huge difference is for making this commitment, I am receiving money by the market. And this is real income. This is real money which is deposited into my broker account immediately. And after that, it's exactly the same like the limit order. We just wait until our expiration date comes around, and either way I will be assigned the stock, so I will own it. If it doesn't drop as far, I will just keep the premium which I got paid up here. And if it drops to my strike price and I have to buy the 100 shares of the stock and it continues to drop, I'm actually less in an unrealized loss because I collected that income up here, which I can also use as a buffer. So it gives me more buffer until I am actually in an unrealized loss. So it just gives me more space and more safety if the stock continues to drop. And this income I cannot deduct here because here I generated no income. On the cash secured put side, I did. And let's say we have the situation that we are assigned 100 shares and the stock continues to drop more. Well, okay, I receive my income from the cash secured put. I get to keep that. And now I can just commit myself to the upside. So I can just continue selling covered calls where I basically say, I'm willing to sell my 100 shares at a higher price. And for that commitment, I receive a premium once again. So I can just continue generating income on the stock if it drops or if it just decides to go sideways for the next months or even years. I can still continue making an income on this, which I cannot on my limit order or if I bought less than 100 shares. And for people watching here with smaller accounts, okay, let's say you maybe have $10,000, $15,000 or $20,000 in savings, and it is a high risk for you to buy 100 shares of one company. I understand that point, but here we have the perfect solution that you can just choose an ETF. Okay, so cash secured puts also work on ETFs. So for example, you have an ETF that goes for around $50 a share. That's going to be a $5,000 commitment because options come in a 100 pack and $50 times 100 makes $5,000. But you have less risk than buying one single company because you literally own an ETF with multiple companies which are a part of that ETF. So that is another way how you can reduce and minimize your risk. And that's why I said here benefit, because it's not really a benefit, okay? If we just act smart and we make the right decisions, I have a much larger benefit over here. If I generate income on the purchase, I generate another income to the upside, and I am diversified with attractive ETFs, okay? So as you can see, the mechanics and the main idea behind a cash secured put are similar to a limit order, just that it is much more attractive. And my strategy, the premium cycle, is perfect for individuals who have good savings, at least 10,000 US dollars and more. And I am generating a full-time income with my strategy, the premium cycle, which I am sharing here on YouTube with you guys. So if you are a busy individual, if you have a good income and you want to make consistent passive income, then check out my YouTube channel and click the link in my bio where it leads you to my community, the Premium Cycle, where I teach this full strategy on how the premium cycle works in detail. And we also have a live community there where I am sharing my live trades so you guys can also benefit from that. So if you're interested in that, click the link in my bio and I will see you there.